right, everybody. Well, thanks a lot for joining me on this Wednesday afternoon market recap. We have seen a very volatile week so far. The first three trading sessions of the current week have seen a very quick reversal off from the closing low price of Friday last week. That has come as somewhat of a surprise. The reality is, however, is that we are just moving back into the battlegrounds that have been presented to us in terms of this red rectangular box here on the S&P 500. The same is true for the Dow Jones Industrial Average and also the Nasdaq, but here on my screen you can really see this illustrative box to represent that of a very dangerous sort of location on the chart itself. What we've done right now is gone through the first phase of this turn down. We've turned obviously back and up in the bullish direction. The problem becomes for the markets right now is whether or not they can actually sustain, hold, and continue above these swing highs. Now, there's a lot of problems for this market. Technically speaking, we're still in the face or looking in the face of very, very weak ADX and also CCI prints. We're also seeing, if I can flick on over into the right template on my screen, the oscillating indicators that are still representative of a correctional pullback. The reason I say this is because when you go into the daily time frame, it looks as though we are turning up off from the midpoint. This is obviously after the first phase down. We've closed this open window that presented itself towards the back end of January, and as such, we're coming back and up, as I've already alluded to this past resistance area. Now, the reality is when we flick on over into the weekly charts, these are doing everything in their absolute power to turn back on up. Technically speaking, we're still very much so overbought, we're overextended. And as at the close, we're getting close to the close on Wednesday. We still have about an hour's left in today's session. You can see here the S&P 500, it has bounced just over 100 points. The problem becomes, however, is that if we do see the rejection of this resistance area, which is what I'm paying very close attention to, what we are going to develop on the daily time frame of these oscillators is some very strong bearish divergence, whereby we're going to see price action temporarily peek its head or poke its head above this resistance, whereby these oscillating indicators are not going to get back up into, or they shouldn't at least get back on up into, overbought settings. This is actually going to establish and set up that very bearish, what we call negative divergence, when it comes to the MACD, the RSI, and also the stochastics. It's something to look for. I understand at the moment you're probably still sitting on the sidelines and you're scratching your head saying, well, why is this market, acting as erratic and as volatile as what it is? This is exactly what happens around intermediate swing tops. You get these very, very quick, very rash, very powerful movements in volatility. That obviously trickles down into the directional movements that we are continuously seeing over the past 3 weeks or so, but it does represent that of a turning point. And that's what's most important at this time. You might be sort of contending with thoughts and ideas of jumping into the market. You may see that the Nasdaq itself, as of yesterday, being that of Tuesday's closing price, that it closed at a fresh new all-time high. Really, the markets, they opened on Wednesday quite strongly. They did gap up once again, about 1%. However, you can see already the detail in the candlestick itself, whereby we're starting to see that upper wick present itself. And again, I've seen this happen so many times before, whereby people assume that it's okay to re-enter or re-establish open long positions right at the possible, worst time, whereby essentially you set up that negative divergence, which you can see hopefully very strongly on my screen at the moment if you use the daily time frame, and everything looks its best right before, of course, it takes a turn for the worst. And I'm presenting to you right now why I believe that the market itself is about to take that turn. It may not set up obviously on Thursday, it may not set up on Friday, but what I can tell you personally is that still I'm yet to allocate any capital on the long side of this market. Still very happily, and content sitting on the sidelines watching this market and just watching this volatility continue to persist. This is going to end at some very close point. I've made parallels between where we are currently in the transition of January into February. We've spoken about the antithesis of what we were looking at towards the bottom in December of 2018 prior to the rally. I'm not suggesting that we're going to see a major pullback beyond that of the past all-time highs, going back to the resistance levels of May, and also obviously going back to 2018 as well. But it still opens up a very clear pathway for the market to take a turn to the downside when we see, and if we see, the clear rejection of this resistance area. Now, I know at the moment we haven't seen that. We're obviously paying very close attention to this with the daily candles, but I understand how you may be feeling if you feel as though you're missing out on this bullish rally. To a point or to some form of a variation you have, up until these most recent swing highs. But what will not surprise me personally is when and if these markets take the turn based on the bearish divergence, not to mention, of course, the ADX that has been very elevated, which is still continuously turning down. Right? The CCI has poked its head back on up above positive 100. But really what's becoming, or at least coming into clear sort of sight at the moment, is the establishment potentially, okay, of a double top based on the Bollinger Bands. Now, there's a couple of ways that we use the Bollinger Bands. My favorite way of using them is obviously the Bollinger Band squeeze. But as it stands at the moment, we're back on up into the top Bollinger Band. You can see the NASDAQ with about an hour left in today's session. It's closing up here, or at least it's up around 9,500 points. When I show you this on the S&P 500, this is really where you should become concerned, because we've got a neckline not only moving into the final session of January, but also if you go back and look back to the end period of December, also into the early period of January, you can see a very clear level of support that has held up until, of course, the last trading session of January, whereby we've moved into the month of February. And again, we're just seeing, right, the complete exhaustion of what appears to be that intermediate bull market push. Now, again, I'm very bullish and optimistic on the year of 2020. I haven't changed whatsoever, and I've remained that way really since the very beginning of 2019. What we're trying to do right now and what we're trying to achieve is to allow, of course, a lot of irrational behavior, a lot of irrational exuberance up and around this sort of location on the charts to sort of run its course, to exhaust itself naturally prior to the turn down, whereby again it looks as though to me we've got that double top piercing very clearly on the Bollinger Bands. All right, we need to see the reversal candlesticks. The NASDAQ itself is beginning almost to print in a bit of a bearish candlestick as at Wednesday's candle, whereby we should begin to see a reaction inside or very close to this red rectangular box, which still hasn't changed on my chart of the S&P 500. We're really starting to develop that of a very short-term channel, or at least at the very best, I should say, a sideways market move. Obviously, the headlines are going to be very bullish, and they're tying, of course, news stories to some of this bullish action that we have seen over the past 3 sessions or so. But again, I am very, very cautious about this current market. In fact, I'm a little bit, the right word isn't scared, but I'm scared for people who do not know what they are doing up and around this location. The easiest thing to do right now is to buy into the pandemonium that is sort of taking hold of the markets and helping propel them back on up to retest these past resistance swing high levels on the S&P 500 and also the Dow Jones Industrial Average. I am expecting this move to fail pretty close to where we are as at Wednesday. We can obviously push an up into recession on Thursday or even Friday, but watch for a very strong, a very decisive, a heavy volume reversal, which will then set in stone the right shoulder upon which we've already developed a very sneaky neckline, which may present, of course, that pullback that we're looking for, or at least the markets, okay, best case scenario to actually reset to stabilize around this pivot prior to, of course, building the foundation to higher prices. The problem I have with this market is that it is just so extremely pushed in terms of this trend so far, whereby we've broken out, it is very clear, but naturally what happens is we will print that intermediate swing high. We will see that natural correction, which will shake out a lot of weak longs and, of course, bring to the forefront a lot of overly zealous bears, upon which we'll see price stabilize at lower areas, whereby we can then, right, strategically enter into the market. So I just wanted to say personally, I haven't done a single thing when it comes to even contemplating, all right, the bullish direction of this market. I can see it as clearly as what you can. Of course, when you see the markets up consecutively speaking on a number of occasions, or at least consecutive sessions like it has been over the past 3 sessions to the upside, it just really adds to the volatility and the irrationality of the market up and around this potential turning point. Of course, what we'll do is we'll structure this in pro this coming Saturday to account for, right, if this market just wants to continue above the swing highs of this little swing high over here. However, it's not going to, surprise me whatsoever if we do see that definitive handbrake pulled on the market, like we are seeing to some extent on the NASDAQ, up and around this area, which is going to set up that potential double top with that neckline just here at 3,225 on the S&P 500. We're seeing a lot of volatility in individual stocks as well, but a good segue is to move into the Russell 2000, whereby again it is strengthening. However, we are still a ways away, or a distance away from not our target, but that resistance area up here just above 1,700 points. Again, it looks like a little bit of a pseudo head and shoulders pattern under construction, and all it's going to take for these markets is to see another outside day candle like we have seen prior to the first phase of this downward leg up and around this current location, which could change, of course, the sentiment and the psychology very, very quickly of market participants. All right, this market at the moment, in my opinion, it's really trying to sort of tempt you. It's like a honeypot, like I've said in the past. especially the longer this goes on for and the longer people feel as though they're on the sidelines and missing out, it's going to feed into the temptation, obviously, of you wanting to jump in. The problem becomes, and what I'm most fearful of for people who are listening to this video, and people more importantly, or unfortunately for them who really don't have any grasp of analysis whatsoever, is that if they find themselves through a lack of patience or discipline, just simply buying into the market up and around this location after the first pullback, and as we move closer to the retest on a number of markets of their past intermediate swing highs, the danger of something bad happening in these general vicinities, it just goes up exponentially. And they're really unaware of this. That's why I'm putting out these YouTube videos or these public updates as much as I have been, and even leading into this little turning point over here. Right now, although it is very exuberant, the market itself, it really is the time to be sort of sitting on the sidelines and just to be watching this market, okay? If we get consecutive closes, if that bearish divergence is avoided as per or through the guise of, right, the MACD, which at this point is just screaming negativity, okay? Well, then, of course, we can get a little bit more constructive on the market and buy into this. However, at the time and for the time being, it's really best to be doing nothing and just to appreciate the amount of risk, the volatility in the market, and to trust in the analysis, which is going to lead us into strategically buying this market at lower prices beyond that of where we closed Friday most recently. So again, it's really testing you. I understand that. It's even testing myself. But again, the thing about trading financial markets and watching financial markets and really trading options as well and understanding the ebbs and flows of the market is to know when to essentially do nothing, to know when to take risk off, and then be prepared to sit through what appears to be during that time, the hard times or the times of patience. But then, of course, it will bring you opportunity when, in fact, the analysis lines up and begins moving back into agreement or synchronicity with what should be happening. I assume that this is a complete irrational bounce off a couple of headlines, obviously what China has done to sort of support their markets after their holiday. And of course, this sort of virus epidemic that they're doing to sort of underpin their financial markets. The US likes this. We're seeing a rally to the upside. There's all sorts of speculation as to, panaceas in regards to this virus and things like this, which are just buoying the market at this particular time, not to mention, of course, central bank activity as well. But as such, and what I have said in the past is that the actual sentiment of people, the emotions of people, it will override, obviously, the fundamental data short term. And this is the exact location where that turning point, technically speaking, will show up if it's going to. If it doesn't, so be it. We'll jump on board with the bullish continuation. However, again, I am still very firmly aware and cautious of this market up and around these critical retest areas. In fact, the first time we turned down, I began to describe and illustrate that of a leaning, right, double top, and the right sort of top of that being up and around this current, right, swing high back in the midpoint of January. Okay, this is applicable not only to the Dow Jones Industrial Average, not only to the S&P 500, but also to the Transportational Average, which is something that we haven't looked at yet. You can see that it's just getting that little bounce off from a really pseudo sort of support area. But more importantly right now, the market breadth being that of the Russell 2000, whereby it's still turned down. We're still a long way away from coming back on up to 1,710 points. And as such, this market right now is just riddled with complacency. It's absolutely riddled with complacency. And if you've come this far so far sitting on the sidelines really since or for the entirety of January, we're still yet to break above the swing high on most of the markets through to the current juncture. Here we are on Wednesday. And I'm telling you right here in this address that there is so much danger if you find yourself even wanting to nibble on positions up and around this current location. Think about the divergence. We've spoken about it in the past. Think about the weekly time frame and how overbought we have been, okay, for a prolonged period of time, what it generally means when we see the crosses from this overbought setting. And even after, of course, potentially divergence setting up in the weekly time frame on the RSI as well. Not to mention, of course, the resetting of both, right, the ADX and the CCI, which is again temporarily pushed into positive territory. However, the ADX is still warning that it wants to reset or allow at least this sort of breakout trend to at least fizzle, to set, before it can continue to higher prices and legitimately trend to higher prices further into 2020. So again, I commend you for your patience and your discipline. If you find yourself still being relatively inactive in the marketplace, I still think you're going to be rewarded because you find yourself in the minority during this time. The easy thing to do is to back the track up and just simply buy as much as you can in the anticipation, or at least in the hope and the expectation that this market is going to break out immediately in the period of February. I beg to differ, and time will tell whether or not we are right or not. But at the same time, what I can say is that very firmly, I've got no problem whatsoever personally sitting on the sidelines and allowing this market to sort of misbehave, to act as irrationally and volatile as it, or at least as what it has been over the past number of weeks, understanding this is going to be the critical retest up here at this resistance area across all the board, and even largely, of course, for the NASDAQ as well, depending on how the daily candlestick actually ends as we move into the close of trade today. So again, I'll keep you updated as this market moves, but at the same time, try and find the strength, try and find the conviction, not to overplay your hand and not to find yourself buying into the temptation of this market as it's drawing in a huge mass of traders just before what I believe is going to be a very abrupt, very quick, all right, very fast, very deep sell-off. All right, it's a big warning. We've got open windows. These windows obviously need to fill. The problem is that I believe we're going to go well beyond and well further than what these windows have essentially developed over the past number of sessions. These candlesticks are going to change. As I said, there's about an hour left in today's session. We'll just monitor this into the close on Wednesday, and we'll see how the week turns around. We'll set up bi-directional trades this coming Saturday in that pro analysis class to take account or take into consideration both ways this market can move. But again, my hunch, my intuition, having seen this play out a number of times over the past 10 or so years, is that this is the critical point whereby a lot of people throw in the towel, they capitulate, they buy at the absolute worst time, and then what they find themselves doing in a number of weeks or even a month or so is actually selling to close a bunch of losing positions right at the wrong time, where they then should be actually buying to open at lower prices. All right, so that'll do us at Wednesday. Hang in there. All right, and I'll see you later in the week for another public address and also in that Saturday class as well. All the best. Farewell.